Hello guys, I'd like to welcome you in the Flipping Markets video course. First of all, I want to introduce myself. My name is Marcel, aka Flipping Markets. I live in Hungary and I'm a session trader, which means I only trade New York Kill Zone. I created this video course to help you in supply and demand trading. I will keep this course as simple as possible because we all know that simplicity is key in the Forex game. There's no need to ever overcomplicate things, especially trading. That's why I kept my PDF and this video course simple. By the end of this course, you'll get a deeper knowledge about the supply and demand trading, and you have a great chance to become funded in a short period of time. So enough of talking, let's just begin. So welcome everyone in the first video. This unit will be about the supply and demand zones. As I said in the intro, I keep this course as simple as possible. First of all, what do we call a supply and demand zone? It's a zone where price rapidly pushes away from, so lots of orders were placed, creates inefficiency. Please pause the video now and check the inefficiency video before you continue to watch this, because it's necessary to check that video before you continue to watch this. So please just pause it and watch the inefficiency video. Okay, move on. It has to break structure or change character. We'll talk about change of characters in the entry unit. And finally, it has to create or collect liquidity. So we have three criteria for a supply and demand zone. And please grab a piece of paper and write it down, because it will be very, very important in the future to write these three criteria down, because you'll be able to identify the zones based on these three criteria. Okay, so the first criteria is, write it down, it has to create inefficiency. We call it IFC from now. Without inefficiency, the zone would be less valid, because zones with IFC attract buyers. So price has a greater chance to tap the zone with IFC than without IFC. Okay, the next criteria is it has to break structure or change character. A supply and demand zone will only be valid if it breaks structure or an opposite side zone. Let's see an example for this. Okay, let's see an example. As you can see, I just drew a higher high and higher low structure here, which is bullish. It creates a break of structures to the upside. Okay, as I said, price has to create inefficiency in order to create a valid demand zone or supply zone. Let's say this move created inefficiency. You won't see it here because you'll only see it in the live charts. But let's say this created inefficiency. As you can see, this broke structure to the upside. So it will be a valid demand zone. The third criteria will be it has to create or collect liquidity, but we'll talk about that later. Okay. We have the first demand zone right here. As you can see, price created another break of structure here on the upside. And let's say this also created an inefficient move. Okay, we have the second demand zone right here. After that, price created a little structure, a little pullback, and reached its high. After the high, it changed character to the downside here. So after a change of character, price will automatically create a zone, either if it's a supply or demand zone. But we'll talk about change of characters in the entry units. Okay, so after a change of character, price created a supply zone because it's a change of character to the downside. So this means supply is in control now. I will just draw a supply zone right here. And supply took over control because it broke the last demand zone, which was here. Okay, if price reacts on this zone, on this demand zone that created inefficiency and break of structure to the upside, price reacts on this zone and breaks through the opposite side zone. So this supply zone, that's why I meant by breaking through an opposite side zone, then it will become valid again. It will become a valid demand zone because let's say it created inefficiency with the movement and broke through an opposite side zone. So yeah, let's move on. Okay, so the third or the +1 criteria is the liquidity creator sweep. I said +1 because it's not necessary to create or sweep liquidity in order to form a valid zone, but it's a really, really strong confirmation. So the first and the second criteria has to happen in order to form a valid zone. So the break of structure and the IFC, it has to happen. But the third, so the liquidity sweep, is just a confirmation. Okay, we'll talk about liquidity sweeps deeper in the liquidity unit. Let's see the criteria on these examples. So the first one is a long example. As you can see, price, let's say, created an inefficient movement to the upside because you won't see inefficiency on this line. But let's say with candles, it created inefficiency. First criteria is fit. This was the last high point. This was the last low point. Price with an inefficient movement broke through the last high point, so it broke structure to the upside. So the second criteria is fit. Let's see the liquidity sweep will collect. We had liquidity trend line here. We'll talk about liquidity trend lines in the liquidity unit. So we have liquidity trend line here. Price swept the liquidity trend line, collected liquidity from above, and it created another liquidity on the way down. So it has double liquidity confirmation because it swept liquidity and created liquidity. So all of the three criteria are fit: inefficiency, break of structure, liquidity. Okay, the same goes on for the bearish structure. As you can see, price has a high point and a low point. Price did a pullback and created a break of structure to the downside. Between pulse movement, let's say we have inefficiency here again. It broke structure because it broke through the last low point. It collected liquidity because we had a liquidity trend line here again. So price swept all of the liquidity from this trend line. Price created liquidity on the way back down to this zone. So it created liquidity and swept liquidity again. So all of the three criteria are fit. Let's apply these criteria on the live chart. So we are on the live charts right now on the 4-hour. As you can see, price was in a bullish trend. And after the bullish trend, price broke this trend and started to form series of lower lows and lower highs. So this means we are in a bearish trend right now. Okay, in a bearish trend, as we know, price will form supply chain. So supply zones over and over again being respected. This is a supply chain. Okay, let's find the supply zones. First, map out our structure. As you can see, we had the last high point right here and the last low point right here. Price broke structure to the downside with this movement, inefficient movement. So first criteria is fit because it broke structure to the downside here. Second is fit because it created inefficient movement. And the third criteria is fit because it swept liquidity. We have liquidity here. So price just swept that liquidity. And as you can see, price levitated back up to this supply because this will be our right supply zone. So price levitated back up to this supply and reacted on it. So I will just mark